And in fact, what you don't realize is that actually was taught for the very first time to even my private members. Like they don't really understand the imbalance to the degree like that lesson was shown. I mean, they know there's sell side delivery, buy side delivery, an imbalance, a SIBI, BISI, but what is actually going on inside that you don't see without having a very, very short time frame, like a second chart or a 15-second chart, something to that effect. You won't really see those gaps because a 1 minute chart and a 1 minute candle will smooth all that out. So it looks just simply like, well, just a down candle or an up candle. And you have probably looked at these things for a long time and never really seen any kind of relevance to the insight behind it. And just beneath the surface, there's the very things that's been hidden from you. So when you hear these folks out there talk about time charts are useless, well, if you're going to try to use time charts in your particular model that doesn't use time charts, then that would probably be a true statement. But time charts, time-based charts, are very influential in terms of teaching what it is I teach that is algorithmic, because the first principle with price delivery is what? Time, then price. So everything has to work around the element of time, certain times of the day, certain time frames, time of the month, time of the year. All those time influences have a major impact on what price is doing. And it has absolutely nothing to do with fundamentals, because we're talking about price delivery on a very short-term time frame. So short-term time frames are not noise, absolutely not. There are things in price action that a time-based chart has the advantage in showcasing that you otherwise wouldn't know. When you have a imbalance where the price moves sharply lower, this real big candle, depending upon whatever time frame you're looking at, it doesn't make a difference. If you have a very large elongated candle and you have a candle prior to it and a candle after that, that creates that imbalance that we look at as a SIBI. SIBI is a sell side imbalance, buy side inefficiency. That means it's going to be a big down candle. Inside that candle, you're going to be looking for what I just showed you, small little gaps. And you have the benefit of finding them if you're using very, very small time frames, like a 1 minute, a 1 second, 5 second, or 15-second chart. Now, I get asked all the time, like when I'm scalping intraday, what time frames do I use? I use a 1 minute or less. That's what I'm using. That's also the reason why I don't care what type of trade I'm doing. I can still enter whatever time frame or style of trading setup that might be. Say short-term trade, like I'm going to hold it for a couple of days, which has been very, very rare. I'm holding one contract over the weekend. You saw that with the ES. But rarely am I holding, beyond the session. When the New York session closes, I'm usually square on the day and I hold nothing. I'm flat. So, and it's only because of the volatility and all the crap that's going on. If we ever get through this shit, then I'll go back to doing short-term trading, because there's lots of money in that. And there's not a whole lot of babysitting. I can still pyramid and let them roll and get a couple hundred points or pips in the market. I'd like to go back to Forex, but my thoughts about that. I don't want to go on that and mix up this conversation with that either. But when you have that imbalance, a SIBI, you're looking at a big candle that's down, and you go through that SIBI and you look for those little tiny little breaks in the lower ultra short-term time frame. And you're only going to see that with a time chart that shows 1 second, 5 second, 15-second. Why does ICT use TradingView? Because I can teach you how to do what I do in that platform, because they give you the access to those ultra short-term time frames, because it's giving you a greater detail beneath the surface that nobody else is aware of, because you're locked into your platform, Ninja Trader. You're locked into your platform, C Trader or Sierra Charts or Super Charts or TradeStation or whatever the fuck long story short, these 1-second charts, these 5-second charts, these 15-second charts, they're going to show you porous price action. Porous price actions where there's little tiny actual gaps between one candle before and the next candle that forms. That little gap, that is a real liquidity void. Now, a liquidity void is that when we go forward, we're not talking about Chris Lorry's definition of a liquidity void. It is the absence of any liquidity at all. No buy side or sell side. There's an actual gap in the chart. My students know that that is always what we refer to as a real liquidity void, where there's a real actual gap. There's no price data at all. That absolutely is a void in liquidity. It's void of any trading. That's a definition that should make sense to everyone. So inside of any buy side imbalance or sell side imbalance, BISI or SIBI, you're looking for those small little micro fractures in price where there isn't a smooth connection between all candles. Time charts are the only way you're going to see that, folks. You need to know where price is going. That's the mystery that you need to figure out. And you don't need to know bias to know that, because you can see where the draw on liquidity is intraday on a 1-minute chart. There's several places it's going to reach for. Now, depending upon the range for where the market price is now and where it's likely to go for a run on stops or rebalance, hey, guess what? That's an opportunity. But ICT, it's only 3.5 handles. Well, guess what? 3.5 handles, that happens at least half a dozen times intraday, all day long throughout the course of a day. You can find very, very low risk 3.5, 4 points in the S&P easily. And you don't think you can make money with that? You don't think you can make money with that? I just took $6,000 to $44,000 in 2.5 weeks just doing that. Real money, folks, not a demo. Boom. So you get wrapped up in all these things that are not really controversies. You know, it has to be a big trade of 50 to 1 because these quote unquote SMC traders, they're all doing 50 to 1, 200 to 1, and they're all still trading on micro lots. It's been 3 years now, 3 years, and these cats are still on micro lots. Why? You can't make money? What the hell's wrong with you? Because if that's what SMC is, then obviously SMC, their way, is full of shit. And then I understand why everybody thinks what I've been doing and what I've authored and created and made available to everybody. When I say it's smart money concepts, which is what I dubbed, okay? That's me. That's what I've been teaching. That's what I